Hey, my good people. Yes, yes, yes. Good afternoon. You already know who it is and what it be. This is Rob P, broker owner, Pasker Real Estate, president of the Greater Toledo Realtors Association, coming at you with a FYI Friday. So you all know about Tidbit Tuesdays. Yes, you know I love my Tidbit Tuesdays, but I wanted to bring something to you at the end of the week to give you something to think about, give you some information that's going to help you change your life, you know, because I truly believe that what is power? Power is the ability to change, and they say that knowledge is power. So on FYI Friday, we're going to bring you that knowledge so that you have the power to change your life and change your family's life and change the world around you. All right, so today it's going to be a smooth day. I'm actually excited. I got a Toledo, Lucas County, Ohio legend that's coming on the show today to talk about real estate and, you know, what people could be doing to turn up on the market. Okay? Turn up, become mortgage. Get your mortgages, get qualified for a mortgage. So shout out to you. If you're in the building, do me a favor, like, share, comment, you know, because the more you engage, the better it is. I love the energy. All of that, you know, I love the action. So do me a favor, if you're in the building, comment, let me know you're here. I love the energy. If you have any questions while we're going over some of this information, let me know, because that's what we're here for. I appreciate y'all. I hope y'all had a great week. It's a lot going on in the world right now. I'm not going to lie. And trust and believe, I have a lot of feelings about what's happening out there in the world, but I'm going to save it for Monday with Real Talk and with Rob P. So today we're going to talk about the real estate market. We're going to talk about the real estate market. I got some information scrolling, and mind you, I got some stuff going on I'm working on too. Some stuff going on here. As far as the market, it's off the hook, man. We got so many buyers out here. We have more buyers looking right now than we've had in 20 years, and we have less people selling than we've had in 20 years. So when we're talking economic low supply and you have high demand, you get higher prices and you get faster transactions. So it's off the hook. It is off the hook. So what is real estate? So a lot of people, you know, we talk about real estate. If you ask me, when you look at the amount of wealth in America, over you take out the top 10% of wealthy Americans, over 60% of the wealth in America is invested in owner-occupied. That means that if you don't own your home, more than likely you have a negative net worth when you talk about all types of debt, such as car notes and student loans and so forth and so such. And it gets even worse when you talk about what's going on in America. You talk about inequity and whatnot. When you look at the home ownership rates among the demographics, you know, the demographics with the lowest home ownership rates are the ones that get the worst treatment. So what does that tell you? You know, we have to get our wealth up. If we want change to happen, we got to get our wealth up. And the wealth up in America, by the land. You know, America was made by entrepreneurs, and these entrepreneurs were landowners. They own land and they made money with their land. And to this day, you can build wealth just by owning a mortgage, just by paying your monthly house note. You know, you're going to have what's called principal that you pay down every month, and with that principal, every month that principal comes and it stacks up. And then after a while, you know, you have enough stacked up in your home in equity where you can use your home as a bank. You know, and that's how a lot of people are financing their education or their children's education. They're financing businesses, missions, nonprofits, all types of stuff. We talk about the tax advantages that come from being a homeowner. You know, being a homeowner is one of the biggest tax write-offs out there. You know, there are over 475 tax write-offs that you can claim. But being a homeowner, you get to write off property taxes. You know, certain improvements in the home you can write off. It's just a lot, you know. Your down payment, the points that you put towards your down payment, it's a lot, you know. So the tax advantages. The good thing about being a homeowner, your payment never rises. If you go with a fixed mortgage, you're gonna find that your payment won't rise for 30 years. Now, your insurance might rise. If your insurance goes up or if your taxes go up, your monthly payment will go up. But as far as that principal and interest payment that you're paying to the lender or your servicer for that matter, it won't rise for ever, never. You know, and that's a big contrast because rental rates right now are appreciating at about 12% year over year nationwide. So, you know, as you have a rent rate increasing higher than the dollar value. So as inflation goes up, so does rent. So that means our dollars are worth more, but more money to live. And at a certain point, it's just that puts people in a position where, what can you do? Shout out to Katrina. What's happening? Katrina in the building. Check out her. She's been producing some great content with the makeup artistry. Check her out. Good stuff popping. But back to what I was talking about. The dollar value is decreasing while the cost of living is going up. So it's putting people in some hard situations long term where it's going to be hard to get themselves, out of the situation. Shout out to y'all. Shout out to Mimi. I appreciate if you in here, like I said, comment, let me know you in the building. We got a good solid 12 people. We going up every Friday, y'all. 1 o'clock is going down. Well, let's keep it moving. Okay, and what else? Homes appreciate value. Appreciation. Yes, it costs money to own a home. Yes, there are expenses associated with it, but homes also, in a sense, it's an asset. So, on a healthy appreciation on 9%. Some neighborhoods appreciate less. Some neighborhoods appreciate more. But if you buy a $100,000 house today, and in the neighborhood it appreciates 9% year over year, next year that home is going to be worth $109,000. And the year after that, it's going to be worth what? $118,000. And year after year after year, you're going to continue to have this appreciation if you take care of your property. Okay, and then you couple that with the equity after living in a home for 10 years or so, you might be away from your starter home with a solid, who knows, anywhere between $10,000, $15,000, $20,000, $30,000 worth of equity between appreciation and just your payment, where you can go put that down on your next home. Might not be the dream home, but it's going to be something that fits you, some years from now. So keep in mind, a lot of people, when it comes to their first home, they stay in their first homes anywhere between 5 to 10 years, could be 7 to 10 years. So if you're thinking about getting into the market and becoming a homeowner, I appreciate that. Thank you, Crystal. Appreciate that, Crystal. Like I was saying, if you're considering becoming a homeowner here within the next anytime. I lost my train of thought, y'all. What up, Narissa? I just say make it happen, because now's the time to do it. Interest rates are historically low. You can purchase more home per dollar than you could any other time. I had a client, his interest rate was 3.1%. That's the lowest that I've seen in all my time doing real estate. The highest I saw was maybe 0.25. 10 years ago, I'll say more like 12, around like 2008, 2009, interest rates were like 9%. So it's a great time to buy. And let's talk about, why I say it's a need. It's a need. My thing is, if you're going to pay for real estate, why not be building wealth off of it? So we're going to talk about Maslow's hierarchy of needs right now. Yeah, Sheldon. I hope you're safe down there in Columbus, my brother. It's going down. But Maslow's hierarchy of needs. Maslow is a psychologist who has this theory about human development, human actualization, and how needs need to be met in certain orders, and in order for a person to be full and be happy, right? So we're talking about behind food and behind air, behind water and food, you gotta have shelter. If you don't have shelter, if you're not safe, what are you gonna do? You can't think about anything unless your shelter is set. Period. You can't think about your dreams. It's hard to think about education. It's hard to think about your body, your health. You don't have the proper shelter. So it's a need. You're going to pay for real estate regardless of whether you're renting or whether you own it. The thing is, why rent when you can own? Why rent when you can own? And there are a lot of options out there, some down payments, assistance programs, which we're going to bring Julia Bryant of Huntington Bank in here to discuss, what your options are. But it's a need. So before you get to talking about, this is what I want to do as far as your dreams. Yeah, map out your dreams, but in those dreams, in that plan, make sure you got a plan for home ownership. And I'm not saying you have to do it now. I'm not saying you got to do it 3 months, 6 months. You don't even have to do it next year. But as long as you are putting your ducks in a row, getting that paper trail together, getting that credit together, paying down that debt, make sure it's in your near future. Anybody can become a homeowner within the next 3 years. And I'm here to help. I got some stuff in the works. I got some big announcements I'm going to make here within the next week. I got something for y'all, for the community. I'm really excited about. But for now, start working on that credit. Start getting that debt paid down. You want to make sure that you have solid employment for at least 2 years before you apply for a mortgage, right? So we're going to talk about all of that here in a minute. So we're going to move on to the next segment. We're going to get this cracking right now, and then we're going to bring in our guest, Julia Bryant of Huntington Bank. She's a legend, y'all. She's a legend. So let's get it going. Oh, man. Oh, they doing me dirty, y'all. It's all good. We get it popping anyway. We get it cracking up. Technical difficulties. Hold on, I got something for y'all. Maybe. Nope. They doing me dirty, y'all. They doing me big dirty. Big dirty. It's all good though. Because we keep it moving, it's all good. FYI Friday, we just gonna bring Julia straight into it. Because they playing with my heart, y'all. Technology, y'all. But anyways, it's all good. We gonna bring her in here. The illustrious, the dynamic. She's a legend.
Hello.
Hello, hello, hello. Hey, Julia.
Hi there.
Hold on.
Trying to see if my.
Nope.
No.
Nope.
We
nope.
know we make it work.
Nope. Hey, y'all, check this out. I'm gonna kill it. I'm gonna come right back. Hold on, Julia. We gonna work this out.
Okay.
All right, I'm about to kill it. I'll be right back, guys. All right, here we go. We're back, and we are live. We're live with the legend. We had a Toledo legend in the building, Julia Bryant. Julia, you've been in the industry for a very, I'll say a long time by my standards. How long have you been doing practicing real estate in Northwest Ohio?
Oh, about 30 years.
30 years?
Yes.
Okay, and you've seen a lot. So for all of you that don't know Julia Bryant, she's done it all. I mean, she could probably tell you more. She's been a realtor. She's been a loan officer, and currently she's at Huntington Bank as a loan officer, helping people qualify for mortgages and helping them in the homes. Julia has been Realtor of the Year, Toledo Realtor of the Year. She's also been an Ohio Realtist of the Year, which are very high honors. And as far as I know, I don't know of any other African American to hold Realtor of the Year in Northwest Ohio. So kudos to you, Julia, for being a trailblazer here. Yes, indeed. So with that being said, you've seen a lot of different recessions. You survived the crash of 2008, and now it's 2020, and we're seeing a recession. How do you feel that, the COVID differs from the same as other recessions you've seen?
Well, I mean, real estate has had its ups and downs. When I started, the rates were good, and we were looking at 11%. So that was a real troublesome time. 18%. So now we're seeing that out.
Somebody's calling me. I'm having a hard time hearing you, Julia. Like you're kind of breaking up a little bit.
Okay. Well,
that's way better. That's better.
Is that better?
That's better.
Okay.
Okay. So I'm sorry. Can you repeat that? I'm so sorry.
Just saying that rates have changed drastically here in this last period, but around even when I got into the industry. When I got into the industry, rates were still roughly around 13%. So if that gives you an idea of what we're looking at today,
Yeah.
then we considered those pretty decent rates, actually.
Right.
Had no idea what I was stepping into back in the 80s, the late 80s, when I got into real estate. And, it was just one of those passions that I had. So I didn't really care about what the market really was like. I thought, well, I'm going to get out here and do it. So that's the way it was. So now when we look at it, though, and you're looking at rates, like you said, you've seen something that's 3%, 3.1%, something like that. Well, we're still quoting those low rates today, even regardless of the virus and all that's going on.
That's amazing. Somebody keeps calling me. Brandon, stop calling me. Sorry. But so with that being said, 13%. So would you say that this is still a great opportunity to purchase a home despite everything that's going on?
Absolutely. It is. It's a great time to purchase a home. There are many lenders out there, but I tell you what, because has the price. And so whether you go with any of the other lenders, just what happens.
I got you. Yeah, I'm having a hard time, Julian.
Oh, I don't know why that is. I don't.
No. It's killing me because I know you dropping jewels.
This is not our day. I don't know if I wonder if everybody else is having trouble hearing too.
Well, it just goes in and out. It just goes in and out.
Okay.
But you sound clear now.
I don't know. Let me try connecting up I don't know what's going on either.
No, you sound clear now.
I don't know, Rob. Let's see. Let's see if we can just make it happen. I don't know.
Hey, we making it happen. We get it cracking. That's what we do. That's what we do. We are solution-oriented people. And in this industry, anything can go wrong at any given time. All we can do is hold it together and keep it moving,
Right.
That's what we do. That's what we do. Yeah.
Are you able to hear me better now?
Absolutely.
Okay, good.
Thank you, Rayvon. Thank you, Sade. Yeah, people say it was breaking up, but we got our cousin Peanuts in the building. But so with all that being said, I know it's a lot of changes right now. People being out of work. What can people do despite everything going on? What can they do to position themselves for home ownership?
What I tell people all the time is be prepared and don't expect it to be easy, and don't expect that that you're not going to be able to do it. A lot of times people don't think that they can.
Right.
And they really can, but they have to prepare. It may not happen next month. And I heard you say it, Rob, within 3 years, you should be able to purchase. And that's true. Mm-hmm. If you persevere, give yourself some time to make it happen. You talked about earlier, credit, getting your credit together, making sure you get some things cleaned off. There are some free agencies. You guys hear me? Free 99. Go find them and get those agencies to help you evaluate your credit and get it cleaned up. It's that simple. That's where you start first. That's your first step. Eh?
Absolutely. I would agree that, there are some agents, there are some companies out there that do credit cleanup and, whatever have you. However you feel about that is it's an individual basis, but I agree. I think it's first and foremost, you want to go to a free agency and take advantage of the free resources out there, for home ownership, because they're out there.
That's absolutely true. And then the other thing that I want to look at, because I have a set conversation that I have with everyone that calls me who's looking for a pre-approval. I want to know what they think of their credit. I want to know if they've been on the job. I heard you say that at least 2 years continuous employment. Doesn't even have to be with the same employer. Just continuous employment without breaks. I won't get into the technicalities. You're allowed small breaks. Let's say you have a child and you're going to be off for a couple of months. That's one thing. But 2 years continuous employment. And then the other thing that you want to do is you want to look at those student loans. A lot of people, I always ask about them because people aren't prepared to student loans, or the first thing that they say is, my student loans are in deferment. So what does that mean to us as lenders?
That's big.
Nothing.
Yeah. That's big. You know, a lot of people, they feel like they'll be held back by student loans. So how should people, just some general rules and guidelines about student loans,
Mhm.
what do you have to say to people who are concerned about their student loans?
Well, if you're concerned, a couple of different ways you can go. Huntington has a product that will allow you to have student loans in deferment, and we don't count them against your debt. However, if you think you're going to be looking at other products, conventional products of that nature, you want to get into a payment plan that reflects a payment on your credit report. So let's say you have, I don't know, $80,000 in student loans. Get into a payment plan. And if that payment plan is $50 a month and it records onto your credit report, we'll just use the $50 a month. So that works on a conventional product. Now, when we get into it a little bit, Rob, there's some things to talk about when it comes to products themselves.
Right.
So I'll let you take me there.
Okay. Okay. So you just said that they would, so it's a specific Huntington product that will allow you to use your payment or your payment plan payment for your student loans?
Yes.
So
Yes,
that's a big deal. Now, how is that different from FHA? I know a lot of first timers, they kind of go with FHA or they think that's the only option, but how does that differ from FHA's guideline for student loans?
Well, when you look at FHA, and a lot of people have to understand that there are different products. So they're, we're in the news about Fannie and Freddie, especially during the real estate industry's turmoil that we went through that. But there are different products, and every product has its own guidelines. So FHA is the one that we utilize the most. However, at FHA, if you don't have a payment on your student loans that will amortize, and that means if you have a $200 payment at the end of 30 years, your student loan balance should be zero. That's amortized. It's amortized. It's going to be paid off. Many times, we are not able to accomplish a payment plan. Usually those payments are much higher. Anybody will tell you they're $500 and $600 higher, and nobody wants to pay that. So they go with the lower payment, but that means that after 30 years, you still have a balance.
Right.
FHA will apply 1% of the total balance as a payment. So that's considered a debt. It's like a car note,
1%.
It's something, another house note, depending
That's
on how high.
Yeah, I mean, so I know some people $80,000 in loan debt.
That's right. That's right. So that's the payment they're looking at. $800 a month is what they will apply, which means now your affordability has dropped substantially. So that's what FHA does. Conventional products will do 0.5%. Or they will take the payment that's on your credit report.
Okay.
Now, Huntington has a portfolio product that we keep in-house. That product is for specific buyers, and that product will allow your loan to be in deferment, your student loans to be in deferment, and we won't apply any payment to that, or we'll take also the payment that's on the credit report. It's very complicated. People who sometimes come to me and say, well, my cousin bought a house, I have to go through this. Well, your cousin might have had a different product.
Yeah.
So products make a difference. You know what I mean?
Absolutely.
So it's not always cut and dry. I spoke to a lady today who has a whole different situation that I haven't experienced before. Yeah. So everybody's different.
That's how it goes. And I try to tell people that, everybody is different. You got to look at your own situation, your financial profile, your employment. Another thing that goes overlooked that maybe you might be able to shed some light on for people is the debt to income ratio. A lot of people think I got my credit, I might have a 600, 700 credit score. I got my employment, I should be good to go, but they find themselves disappointed when it comes to affordability and debt to income ratio.
That's a very good point because people feel like, okay, my credit score is good, now I'm ready to buy a house. Well, there are others that contribute to your ability to purchase a home, to finance a home. And debt to income is one of them. So let's say you have, and I'm going to keep it simple, let's say you have $1,000 in debt that you pay out. You have your car, you have charge cards because you like to shop,
Right.
maybe Penny, Walmart, Victoria's Secret, everybody. I've seen that. But your income per month is $1,500. So you got $500 that you're working off of after you pay off that debt.
Yeah.
So when we apply that percentage that we utilize, some products are 43%, some products are 47%. Debt to income ratio, we're adding your debt, your total debt that you're paying out in credit, trade lines,
Right.
plus your housing. So what your new payment would be, and that's going to determine your debt to income ratio in comparison to what you're bringing home. So that's what we look at.
I got you. Okay, well, I can appreciate you shedding some light on that. So, something else that I tell people, every bank has different loan programs, and I know Huntington has a bunch of programs that I think are very instrumental for some people that may qualify for them. You want to share some of those?
Wow.
I know you got a lot of...
I've been with Huntington for years now, and I've worked with two other institutions, which I really enjoyed. All of them were good places to work.
Right.
But what got me at Huntington was the fact that, number one, I'm a community lender, which means that my job specifically is to go out and make homeowners of people in the low to moderate income census tracts. So that's my job. And when Huntington showed me their product, I was sold.
Yeah.
I always said, I'm not going to work for another big bank. Oh my goodness, it drives me crazy.
Yeah.
But when I saw what they were offering, it was crazy, and I was like, okay, I gotta work with these products. So one of the products I was talking to you about that really stands out, and it's for a couple of reasons. As a real estate professional, that FHA can be challenging because of what?
The government.
The government. The government and the appraisal.
Yeah.
You got to make sure that you don't have a bunch of repairs. So you got, if you're up against somebody and they're challenging you and you got multiple offers at FHA, one might get pushed aside because
Absolutely.
the requirements are tighter, right?
Yeah.
So what we have now at Huntington, and we had it before, but now I'm able to offer it. It was just in a different system and I couldn't access that system, is we have our community access mortgage renovation piece. So what that does is, if you're looking at a house and you really like the house, the price is right, everything looks good, but you're not sure it's going to pass FHA, this is, number one, a conventional product. Two, it's one that we keep in house.
Yeah.
And three, you can actually roll in the repairs. So if the appraiser comes out and he calls for electrical update, you can actually roll that electrical update into the loan amount.
Wow.
That's big.
Yeah. No, that's a big deal.
Yeah.
Especially, so is it a conventional product?
It's a conventional product.
Yeah. Now,
go ahead.
I was gonna say, as far as like other repairs, does that include like repairs as well, or is it more so just like functional repairs?
It is the appraisal repairs. So whatever the appraiser goes out and he cites that needs to happen before it closes, then that's what they can roll into their loan. Of course, they still got to qualify now. This is not something like, if you're right at the edge and you're just teetering and you can just barely afford the $85,000, you're going to be able to tack on another $10,000, because then we go back to the whole debt to income ratio thing.
Absolutely.
It has to be affordable, but still, sometimes there's a good deal out there and you don't go for it because it's going to need repairs that you can't afford to make yourself.
Right. Yeah, I get it. You have now, speaking of renovations, do you recommend people, especially for their first home, purchase fixer-uppers?
Do I recommend people get fixer-uppers?
For their first home?
No.
I'm a big fan of it.
No, if you're not really real estate savvy, it probably is not the thing to do. I mean, we get people and they go, okay, I saw a sheriff show but you know that you can't get into those houses in most cases until the day of the sale. On occasion, you'll find that they're on the market and you might be able to slip in there and then show up at the sheriff's sale and put your bid in.
Right.
But if we send out an appraiser and there's an issue with the house, you've lost your money if you can't make those repairs. So I don't recommend doing that unless you really know what you're doing or you have somebody that's with you that can tell you and guide you and that you can trust.
You're right.
Same for foreclosed properties that are out there that need work, or I'm going to say auction properties, same thing. You know, if you're going to clump down $2,000 to hold the property and they'll only find out that you can't get it because of repairs, that's an issue. You need to know what you're doing if that's what you're going to do.
Now, Huntington, doesn't Huntington have a renovation loan?
We have a great renovation loan. It's called the Home Style Renovation Loan. The Home Style Renovation Loan is good for individuals who kind of have an idea of what they want to do. It is less complicated than what you've heard the FHA 203K loan.
Absolutely.
It's a little more complicated. So the Home Style Renovation Loan simplifies it. Still, you got to do some work and you got to understand what you're doing.
Right.
Done by a contractor. So there are certain guidelines that apply. But for those who feel like, hey, yep, I can do this, I can rise to this occasion and I can make it happen, then the Home Style Renovation Loan is an excellent product.
Cool. And I got one more question.
Yep.
What down payment or what low down payment assistance programs or loans do you recommend for people?
Wow. Well, there are a few of them. There's, I was just talking to a young lady today. We do USDA. So if you're looking to purchase outside in the rural areas, outside the city, USDA is a perfect way to go. It's a zero down program. We have the City of Toledo DPA program. Yep. Still a quality program. It takes a little, you got to be patient with it, but you're not paying that money back, so it's worth it. And also OFA, Ohio Finance Agency, has a fantastic program. Turnaround time on that one is really good.
Yeah.
And then once a year, as you know, we do the Welcome Home grant. Yep. So that's every March, the Welcome Home funds come out. That's $5,000 that you don't have to pay back.
Yeah, that's amazing, actually. Every March, I tell people, get ready. Get ready. If you're going to do it in March.
Yes, do it in March. That's right. If you don't have the funds and you need the money, you come to the closing table with $500 out of pocket and you're ready to go.
Absolutely.
Yeah.
So do you have anything else for the people you want to add, Julia?
The only thing that I can say is be prepared, be patient. A lot of times in this time of instant gratification, people want things to happen right now, and it doesn't always work that way. As a loan officer, and I think I can speak for all unit officers, we all care about our clients. We want your transactions to close, and usually behind the scenes, we are whining and crying and telling somebody about our client, and we are trying to get our deals to the closing table. Always know that. We're on your side.
Absolutely.
We're on the side of our realtor partners out there, and we're willing to do what it takes to get the deals together.
Absolutely. It's not easy. A lot of people don't understand all the different levers and pulleys and gears that are involved with a real estate transaction. But I do know that you community mortgage loan officers, you bear a lot of the brunt. A lot of times you kind of feel like you're thrown underneath the bus, but it's not. A lot of stuff isn't even in your power. So I appreciate you and all that you do. You're definitely you're an inspiration, a trailblazer here in Northwest Ohio, and I just look forward to continuing business, making more deals happen, helping more people become homeowners.
I'm looking forward to it. I look forward to working with you, Rob. You do a great job out there, and I like your innovation. And anytime you guys need me, Rob can reach out to me. You can text me. I answer emails. I answer text messages just with general questions. You don't have to use me or anything like that, just to make sure that you do the right thing.
Absolutely. Where can they find you, Julia?
Well, of course, you're going to find me at Huntington. My office is at Germain Park, which is on the corner of Upton and Monroe. But you can always utilize my cell number, 419-320-0909. I respond to my text messages and I respond to my calls.
There it is. You see it. You heard it. You heard it here on FYI Friday. Julie, we appreciate you. Appreciate you letting me pick your brain for the people. You had a lot of people that got some good stuff from it. So
Good.
we'll keep it. We keep it going. Kind of froze up on us, but you're back.
I'm back.
You're back. Well, thank you, Julie. I'm gonna let you go in here because I know you got a busy day. I just appreciate your time.
Sure.
Absolutely.
Thank you, Rob.
Hey, my
Bye,
pleasure.
everybody.
Thank you.
Bye-bye.
Bye. All right, give it up, y'all. Give it up for Julia Bryant. We're gonna clap it up for her. Clap it up for her. Yeah. But yeah, so you already know what it is, y'all. You see it. It's going down. People becoming homeowners here in Northwest Ohio, and that's what we're here for. We're here to make it happen as realtists in the city here. Julia is a founding member of the Greater Toledo Realtist Association, former president of the Toledo Realtist Association back in the day as well. So that's what we're very passionate about, helping people that have been marginalized in a homeownership and helping them build wealth. So that's the mission, and that's what we're about. We got some great programming coming here, so stay tuned. But I appreciate, shout out to all of y'all. Shout out to my cousins that was in the building. Shout out to John. I appreciate all the comments and the love. Do me a favor, if you're watching, to share. We had some technical difficulties, but just like in life, in a lot of real estate transactions, stuff happens, but we just keep it moving. We cross every bridge and keep it moving. What is life without adversity? It's boring. I promise you it is. So so with that being said, check back next Friday for FYI Friday, 1 p.m. on YouTube, Facebook, and Twitter. Stay tuned. Monday night, 9 o'clock, I'm coming with that Real Talk with Rob P. It's going down. I've got my boy Jay, Keith Keller, coming through. We're going to have some real relationship talk. I'm looking forward to it. So until then, you all be great. Stay down, stay diligent, and stay positive, because it's hard out here, man. It's hard, man. The world will try to bring you down, but stay positive. We need that energy. All right? Appreciate y'all. My guy, I got you. I got y'all. Got you, Anthony. Peace.